If you own a corporation, whether it's a business, a professional practice, a farm, or a fishing operation, there's one tax concept that is too important to ignore. It's called the Lifetime Capital Gains Exemption, or LCGE. For many business owners, this exemption can represent one of the largest tax savings opportunities in their lifetime. The LCGE allows an individual to sell qualifying shares of a private corporation and shelter a portion of the capital gain from tax. If structured properly, this can translate into hundreds of thousands of dollars in tax savings. The exemption is not automatic, as the corporation must qualify and the planning must be done well in advance of the sale. To access the LCGE, the shares being sold must be shares of a qualified small business corporation, often referred to as the QSBC. In simple terms, that means you must be selling shares, not assets. The company must be a Canadian-controlled private corporation, and for at least 24 months before the sale, certain asset use tests must be met. From a planning perspective, sellers usually want to sell shares because that's how the LCGE is triggered. Buyers, on the other hand, often prefer to buy assets because it reduces their risk and allows them to step up the tax cost of those assets. This difference is why businesses are sometimes priced in two ways: one price for a share sale, a higher price for an asset sale. Understanding this dynamic early helps business owners prepare for negotiations later. For business owners who have built up significant retained earnings, we often discuss the creation of a holding company, or a holdco. A holdco allows excess cash or investments to be moved out of the operating company on a tax-deferred basis. Removing surplus and passive assets from the operating company can reduce risk, improve QSBC eligibility, and potentially lower the eventual purchase price, making the business easier to sell. The LCGE is indexed over time, and the available exemption has grown meaningfully. It is important to note that the LCGE planning is not something you do when you're selling the business. It's something you do years before. We initiate this conversation as soon as possible when we begin working with a new business owner client. Because the earlier the planning starts, the more options remain available. If you like this video, you can discover more videos in the Greenard Exchange section of our website. You can also read both past and current articles in the Greenard Index section. Thanks for listening.